Okay, here we're continuing our discussion of ARC Section 90A for the review of financial statements. And in the last video, we talked about how to modify our accountant's review report when there is supplementary information included with the financial statements that were under review. And this video will go along the same lines, only in this case, the supplementary information was required by the financial reporting framework that we use. So for instance, if GAAP required the supplementary information to be included with the financial statements, then our other matter paragraph is going to be a little bit different than the one that we discussed in the other video, in the previous video, where that supplementary information wasn't necessarily required by the financial reporting framework, but management decided to include it just as additional information to help the users of the financial statement. So there are three scenarios, basically, when we are including required supplementary information with the financial statements. The first scenario is that we reviewed this supplementary information that was included. The second scenario might be that we did not review this supplementary information that was included, and so there would be different disclosures related to that. And the third scenario would be that this supplementary information was required by the financial reporting framework, but our client did not include that supplementary information. So the other matter paragraph would be a bit different in that instance, because it would basically be a departure from the financial reporting framework. So let's start with the first one, where we should include an other matter paragraph that describes the situation, however it may be. So we don't necessarily include all of these items, but the ones that are applicable to our situation. So if we performed a compilation engagement on the required supplementary information, we would say that. So we performed a compilation engagement on the required supplementary information. Or if instead we reviewed the supplementary information, then we would say that we reviewed the required supplementary information. And if we neither compiled, reviewed, or audited that supplementary information, we would say that. So, and if it turns out that required supplementary information was omitted, we should say that. And of course, we'll discuss that more in detail down here with these two paragraphs. But next, if some of the required supplementary information is included and some of it is missing, we should notify the users of the financial statement about that, which will be discussed shortly as well. And if we have identified any departures from the guidelines, we should say that. And if we have any unresolved doubts about whether the required supplementary information is presented in accordance with prescribed guidelines, we should say that. So these are several different scenarios that might occur, and in general, our paragraph should state which situation that has occurred. And so if it turns out that our client has presented all or some of the required supplementary information, and we did not perform a compilation or review on that supplementary information, then our other matter paragraph should include the following elements. It should say a statement that the applicable financial reporting framework requires that this required supplementary information be presented to supplement the basic financial statements. We should also include a statement that that information is required by the standard setter for the applicable financial reporting framework that we're using, and that standard setter considers it to be an essential part of the financial statements. We should also include a statement that we did not perform a compilation review or audit on the supplementary information, and that we do not express an opinion or provide any assurance on it. And this is for the situation where they included everything in the supplementary information that they were supposed to. But if it turns out that some of the supplementary information they were supposed to include is omitted, then we should say these statements. That would be a statement that management omitted, and then we would describe what they omitted, and then say that the financial reporting framework requires that it be presented to supplement the basic financial statements. And we should also say that that missing information is required by the standard setter that governs this applicable financial reporting framework, and they have decided that it's essential to supplement the basic financial statements. And next, if the measurement or presentation of the required supplementary information departs materially from the prescribed guidelines, then we should describe the material departures from the applicable financial reporting framework in this paragraph that we're constructing. And if we have unresolved doubts about whether the required supplementary information is measured or presented in accordance with prescribed guidelines, then we should state that we have doubts about whether material modifications should be made to the required supplementary information for it to be presented in accordance with the guidelines established by the standard setter. And finally, if all of the supplementary information is omitted, then in our other matter paragraph, we should include a statement that management has omitted the required supplementary information, and that the financial reporting framework requires that that supplementary information be presented. And we should also include a statement that that missing information is required by whichever standard setter governs the financial reporting framework standards, and that they consider it to be an essential part of the financial statements. And so, in general, if there is required supplementary information included with the financial statements, or supposed to be included with the financial statements, we have to include another matter paragraph. And there's a lot of different routes we could take with it. We either say that we reviewed or compiled or audited that supplementary information, or that we didn't. We either say that the management has included it fully and completely, or that they have not. And but in all cases, we should say that the required supplementary information is part of, or is required by the financial reporting framework established by the standard setter. And so we've got some explanatory material throughout here, A135 through A136, A137. And that's it. So let's go down to A135 through A137 and get some more details on how we might describe the situation with this required supplementary information. Okay, so now we're down in the explanatory material section, A135 through A137, related to how we need to modify our accounts review report for required supplementary information that's included with the financial statement. So first it says they've given us some examples of required supplementary information that may accompany reviewed financial statements, and that might be for common interest realty associations. There are estimates of current or future costs of major repairs and replacements of common property, and that's required to be in a supplementary information schedule. Also, the MD&A and the budgetary comparison are considered to be required supplementary information. And they define here prescribed guidelines, which are the authoritative guidelines established by the designated accounting standard setter for the methods of measurement and presentation of the required supplementary information. So, for instance, this ASC section 972, etc., would be considered these prescribed guidelines. And then finally, this is fairly obvious, but it says if because the required supplementary information accompanies basic financial statements, the accounts review report on the financial statements includes a discussion of the responsibility taken by the accountant on that information. So that's why we are including that other matter paragraph. And it says, however, if the required supplementary information is omitted by the entity, then we don't have a responsibility to present that information. So we don't have to make the client prepare and give us and present that information in the financial statements. Our only responsibility is to include that other matter paragraph that says the supplementary information is required, but management has elected not to provide it. So